channel. I'm Doris. I'm here to show you about my stock account update. Today, my stock account has made a loss of $356 US. US stocks closed Friday for the week in April. High inflationary pressure in the US have reinforced the Fed's case to raise interest rates. So first, let's take a look at my account. Today, my account has made a loss of $31,833.39. Today's PL is a loss of 0.5%. And United Natural Gas made a gain of 1.89% to rise to $7.01. SPXU made a loss of 2.41% to 12.97. And SQQ made a loss of 2.03% to 28.96. Right now in my stock account, I have made right now the industries generally closed higher, except for the internet retail, which closed down 2.15%, and Dow Jones Industrial Average closed higher for 0.8%. Nasdaq Composite closed higher with 0.69%, and S&P 500 closed with a gain of 0.83%. U.S. stocks closed higher on Friday. All three major indexes posted gains this weekend in May. Investors are weighing the earnings result from the companies such as Amazon. The Fed's favorite inflation index, the core PCE price index, rose 0.3% month-on-month, in line with expectations. Earnings season is so far roughly better than expected. About 81% of 261 S&P 500 companies that have reported earnings were better than expected. Bovin Wealth Management, the president, Bovin, said the market should follow the results. That's the lifeblood of the market. AXS Investment Chief Executive Officer Greg Besock said, today's stock market is dominated by three major factors. Earnings result, economic data, Fed policy movement remain the top concerns for investors. Amazon shares closed down 4%. The market beat our expectations in the first quarter, but its cloud business slowed. Snap shares fell 17% after a weaker revenue expectation. Pinterest was sharply lower as what investors were disappointed with revenue growth expectations for the fiscal second quarter. Intel announced that both revenue and earnings has exceeded market expectations. On the economic data front, the latest Commerce Department data shows that the personal consumption spending index rose 4.2% in March from a year earlier, and expectations of 4.1% and 5% last. PCE price index is a key measure of private consumer inflation in the U.S. Fed's favorite inflation index, the U.S. core PCE index, rose 0.3% month-on-month, versus 0.3% expected and 0.3% lost. The University of Michigan Consumer Confidence Index for April was 63.5, expected and versus 63.5 last. The final April forecast index was 60.5, 60.4 expected and 60.3 last. The final April current conditions index was 68.2 versus 68.6 expected and 68.6 last. One-year inflation forecast for April is 4.6%, compared with 4.6% last. High inflationary pressures in the U.S. have reinforced the Fed's case to raise interest rates. The two key indicators show persistently high U.S. inflationary pressure in the recent months, reinforcing the case for the Fed to raise interest rates again next week. The Fed's core personal consumption spending price index, which except food and energy, rose 0.0% in March from the previous months and 4.6% from a year earlier. Commerce Department data show on Friday the Fed's 2% target is based on broader indicators, but it believes the core indicators better reflect inflation trends. Meanwhile, a separate report on Friday showed Labor Department employment cost measure rose 1.2% in the first quarter from the previous quarter, beating expectations. The measure is also being closely watched by the Fed. The PCE data, coupled with rising labor costs, further reinforce the forecast that Fed policymakers will raise interest rates by another 25 basis points at the next week's meeting. While annual inflation has peaked, the return to 2% target has been bumpy. One bright spot in the report is the closely watched slowdown in the cost of services. calculations that the service prices, excluding house and energy services, rose 0.2% in March from the previous month. However, on year-on-year basis, it was still up 4.5%. One concern of the market is that the high inflation in services, particularly because of the strong wage growth, poses the risk that inflation will remain above the Fed's target for the foreseeable future. That said, Fed officials are divided on assessing the impact of wage increase on inflation. While a strong labor market and the extra savings supported household spending, consumption is also starting to lose steam. Price-adjusted personal consumption spending was flat in March month-on-month, reflecting declines in goods spending and sluggish growth in service spending. The February data was revised down to a 0.2% decline. Weak consumer spending shows that the consumer spending is becoming increasingly vigilant and buying less discretionary goods, while a strong labor market continued to wage growth and excess savings supported consumption and amid higher prices. The data show momentum is fading. Looking ahead, even if spending remains high, its lack of growth will make it difficult for the economy to expand sustainably. The overall PCE rose 4.2% in March from a year earlier. The significant slowdown from March 2022, when the energy prices soared after the Russian invasion of Ukraine. Still, the March data was about twice of Fed's 2% target. Adjusted to inflation, commodity spending fell 0.4% in March, the biggest drop in 3 months, reflecting a decline in car services. Service spending edged up 0.1%, supported by housing and utility consumption. Inflation-adjusted disposable income rose 0.3%. Unadjusted wages also rose 0.0% for the second straight month. The savings rate climbed to 5.1%, the highest level since the end of 2022. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.